This is Tom Alexander. It is Sunday afternoon, August 8th, and this is going to be a video report that gives that provides more detail to the written report. If you do not have the written report, you can receive written reports from me by going to the website and signing up for the free newsletter. My website is www.alexandertrading.com. I would also appreciate it if you would subscribe to this YouTube channel, and if you find the information in this video useful, like it. Okay, we're going to start with a profile view of the S&P. Now, this particular chronological configuration is the daily profile, meaning each letter represents one day. When you are analyzing markets using market profile, you're trying to identify market condition. The magic is not in a particular graphing format, candles, bars, all the others that, they're constantly coming out with a new charting format. What you're trying to do is to identify market condition, and specifically auction market condition, because we're trading auction markets. There are very well defined and distinct and immutable processes of development that auction markets go through. So regardless of the charting format that we're using, the end is to identify market condition. Okay? So if we look at this basically the information on this chart, we can see the August auction is pretty narrow ranged. So that tells us immediately something, and that is that the range for the August auction is very likely to expand before the August auction is complete. Now, that's not a big surprise because we're really only about a week into the August auction. But what do we know? What else do we know? Well, so far we see a very consistent migration of value higher. How do you know that? Well, if you look at the magenta line, this is the high volume node. I do not use a value area. A value area is basically useless information. The high volume node is much more useful and helpful. So we have a migration of value higher. We broke out of balance here, traded higher here, traded higher into July. July had a furious ramp higher, and then we recently have gone into a mind-numbing chop fest. So let's split this out and see if we can tell anything else that's useful that might be going on. And indeed, we can. So we have, and this, you have to be careful when you use a specific chronological construct for your profile view, because what you're trying to determine, again, is market condition. The auction process is in effect in all degrees of time all the time, and it does not limit itself to one particular time frame. It's a constant flow. So there's always an auction within an auction, and for the relevant information that you need to trade going into next week is in here. This is all one balance area. Now, Friday was important, and as I put in the report, both the ES, SPX, and Dow YM are in the same relative position. Both appear to be breaking initiatively out of balance. There are two market phases, balance and imbalance. You're in a constant transition from one to another. You can be in balance in one time frame and imbalance in another. But on the sort of the swing trade intermediate term perspective, what you expect now, we have a really well-defined if-then scenario. This market should continue higher. It should continue higher strongly and immediately. If we take out Friday session lows, it's very likely this is a false breakout trade. A false breakout trade is a wonderful trade because it's one of the more highly probable trades that works most of the time. Dare I say that? How do you know if we're in the process of a false breakout trade? Well, your first signal is if we trade below Friday's session low. And especially if all the indices are in sync to the downside when you're taking out the lows in the ES and the YM, it's very likely we're trading lower. And the potential for that trade is to the low extreme of this balance area or lower. And what we would likely do if it is a false breakout trade is we'll trade through this range in a fraction of the time that it took to create the range. So a day or two, maybe. Now, that's not a prediction. I'm just giving you an if-then scenario. The benefit of the doubt should always go to the initiative situation, and in that case, and we'll know in a few hours when Globex opens up, we'll get a good idea. But based on the fact that we have traded above, closed at new all-time highs, we've closed above this balance area, Friday was a wide range up day, we should see immediate further upside follow-through if indeed the next phase of development is going to be higher, and then we trade higher for a few days and we balance again, rinse and repeat. Now the YM is in the same relative position as the ES. Let's take a look at the YM. And we'll split it out. And you will be able to see, here's the balance area right in here. Same situation. The ES and YM are in lockstep at the moment. All right, let's take a look at the NQ. Now the NQ showed some uncharacteristic relative weakness on Friday, and it's going to be important to monitor that as we head into the cash session on Monday. And really, what I expect to see in the NQ, I expect to see, and this may be the canary in the coal mine, either immediate further strength and it begins to trade higher, or it's going to crater. Now, you're not going to have the Dow and the ES ripping higher and the NQ going lower. That's not going to happen. So these are out of sync. I expect them to get, when I say these, the ES, YM, and NQ are out of sync. I expect them to get in sync by tomorrow's cash market. Now, the Lone Ranger here, Mr. Russell, and this is a contract that can go its own way, is mired in the world's most mind-numbing and one of the longest balance areas that I can recall in quite some time in one of the stock indices. But also, it too is unlikely to move far counter to a strong move in the other three. So that's what we're looking at in terms of key reference areas and where the auction is. So things are partly cloudy as we head into Globex, but because of the position of the ES and the YM attempting to break initiatively, having closed the new all-time highs, we really should see immediate strength in those two and in the NQ and likely in the Russell, if that is the beginning of another sharp move higher for days or longer. Okay, here is the updated view of market internals, specifically NYSE breadth. The red line is a 10-day moving average of NYSE advancing issues only. The green line is 5-day moving average of NYSE advancing issues, and the blue is breadth. It's the net of advancing minus declining issues on a day-to-day closing basis. Breadth has also been in a balance area, but unlike the SPX and the Dow, it did not break to a new high, and it needs to. We need to see if we're going to have this ripping upside move. Breadth needs to confirm it by being closed Friday at plus 608. So we need to see breadth expand something plus 1500 or above, and ideally above. Or we could be forming some sort of significant top. Now, you use price action to confirm whether or not we're ripping higher, whether or not we could be forming a significant top. And it's right now, your tell is what's going to happen by the cash open. We'll probably know by the time cash opens what the deal is going to be. Are we going to rip higher, or is this a false breakout trade? So next week should be interesting, guys. I hope you found this helpful and useful. And again, I would appreciate it if you would subscribe to the YouTube channel. And if you like this video, like it. Thank you. Have a great week.